Welcome, everyone, to the Vested Interest channel. This is Shane, and we are back for our weekly portfolio update. We did add $1,143 in new capital, so we will cover what we bought with those funds, any dividends we received, any options we were in. The portfolio did end the week relatively flat compared to last week at $462,765. If you like this type of content, you can help out the channel by hitting all of those buttons down below. Make sure you like, subscribe, hit the notification bell so you're notified whenever I put out any new content, and join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell and make sure you're subscribed. All right, options. We did not have any options in the portfolio this week, so a quick run through there. Now for dividends, it was a little different story. We did have some dividends come in on December 1st. $301.02 total, and that was broken up by two different positions. Paid us Kroger, ticker KR, out of the consumer staple sector. They paid us $36.34. That went right back in and picked up 0.53869 more shares of Kroger. We do have the drip on the portfolio, so anytime a position, whether it's an individual stock or ETF, a REIT, whatever it is, it pays out a dividend, then that gets reinvested right back into the company. We don't have to do anything. It's automatic. Pfizer also paid us $264.68. Those funds went right back in and picked up more shares of Pfizer. Ticker PFE is out of the healthcare sector, and we picked up 10.27086 more shares. These new shares paid for by the dividends added $10.61 in future passive income over the next calendar year. Now, this is, if you hear people talking about the dividend snowball effect or compounded interest, this is what they're talking about, right? We already hold position in Kroger and Pfizer, so we have bought those shares. Those shares pay out dividends. Those dividends get reinvested. Buying more shares, the new shares add additional future capital, and that dividend snowball continues to grow, and the hill that it is rolling down is time. That is the idea behind dividend growth investing and compounded interest in general. Now, we also received dividends from Enbridge, and I do want to talk about this for a second. Enbridge, you'll see here there are three different lines, and there is a reason for that. Enbridge actually paid us $167.02 in dividends, but because it is a Canadian company and I am in America, my brokerage account automatically takes out the taxes that are applicable for this holding. So $25.05 in taxes gets removed, and then $141.97, the difference between the original dividend minus the taxes, gets reinvested. So not the original 167, but everything less taxes. 141.97 gets automatically reinvested back into Enbridge, ticker EMB, out of the energy sector, picking up 2.91172 more shares of Enbridge, which adds an additional $7.65 in passive income over the next calendar year. Now we get to the new capital invested on December 1st. We added $687.55. With those funds, we picked up one more share added to our VG Properties position, ticker VICI. This is a REIT out of the real estate sector, $28.46. We picked up that one share there. Three more shares added to our Owens Corning position, ticker OC. Picked up those shares at $114.32. Owens Corning is out of the industrial sector. Now, these two are our weekly buys from last Friday whenever we were late getting into the market. So this is part of last week's buys. These should have been bought on Friday, but if you remember, the market closed early on Friday. I didn't get into the market till a little after 2, and it was already closed, so I wanted to make sure to get these in. So 6 more shares added to Schwab Strategic Dividend Growth ETF. That's last week, and then VXUS as well, Vanguard's international stock market, 2 more shares there at $74.93. So this wraps up last week. These are new funds for this week. So part of this $687.55 was this last week addition, but that did add $19.19 in future passive income over the next calendar year from the new shares that we did pick up. Went back into the market on December 5th, Friday, $455.83 in additional capital that we added on that day. Picked up one more share of Pfizer, ticker PFE, out of the healthcare sector, added there at $25.69. 4 more shares added to our VG position, ticker VICI, at $28.12. VG is a REIT, and these are our weekly buys, right? So it should look very similar to what we bought on Monday, catching up from last week. 2 more shares to our Vanguard's international dividend ETF here, ticker VXUS. This is the entire stock market except for the United States. So 2 shares we picked up at $75.58, and there's SCHD, Schwab Strategic Dividend Growth ETF. There are 6 more shares at $27.76. This $455.83, the new shares we added with that capital, adds an additional $18.03 in passive income over the next calendar year. Total invested $1,143.38. Total passive income added, not just from the new capital, but also from the dividends that got reinvested as well, $55.48 in additional passive income added this past week. All right, let's run through a quick sector weight update here. Communications makes up 8.21% of the portfolio. Consumer discretionary at 2.65%. Consumer staples makes up 7.21% of the pie. Energy at 8.79%. Financials makes up 6.4% of the overall portfolio. Healthcare. Financials at 6.4%. Healthcare at 16.66% of the portfolio. It is in second place. Industrials is next up at 5.73%. Then we get technology, which is the largest slice of the pie, and really that is because of the run-up of Google and Lam Research over the last, since April. Materials makes up 2.67% of the portfolio. Utilities at 3.69%. 5.46% is REITs and real estate, and in third place, there are ETFs at 13.53%. Eventually, this will be the largest slice of the pie just by the nature of adding to that position every single week. But for right now, it's in third with technology leading the pack, healthcare in second, and then ETFs. Now, over here to the right, you can see the same percentages that makes up the overall pie as well as the dollar amount allocated to each sector as well. Now here it is, and I do show this every single week. I want you to see a real portfolio built out over time. So hopefully some of you that are maybe new to investing or that are on the fence about investing, you see some of these red positions. You know that happens whenever you own individual stocks. They are going to run up. They're going to pull back. Sometimes they go into the red. That does happen if you've bought good shares of good companies at good prices. Whenever you see discounts like what I think I'm seeing in front of me, you should be willing to buy more at those discounted prices. Now, if the fundamentals of the stock have changed and something is wrong fundamentally with the company, the revenue is slowed, margins are decreasing, they get themselves into some debt issues, then maybe it is time to reevaluate and sell out of it. But for right now, I still think that the companies that you're seeing in my portfolio, Comcast, I've been nibbling on. Owens Corning, you just saw I added 3 more shares there. Pfizer, I just added a little bit more. Didn't add Procter & Gamble didn't add any this week, but I have added in the last month or so. While that one's down, I probably will add to it. 143. I like it under 150, so probably look to add to that one a little bit here if it stays down. And there is Vici as well. So as you can see, I am buying the positions that have pulled back because, again, I think they were great buys at the previous prices. Now that they are under my cost basis, I want to build out those positions. I still am in accumulation mode. So again, hopefully this gives some of you out there the confidence. You don't have to run out and sell and panic to think that, the sky is falling, I need to sell these positions. It happens to the best of us, and you hope that that's short-lived and they rebound. We all want to see the green, but red does happen. So anyway, that is part of the reason I show my portfolio. And also I think it's for those of us in this space that are talking about investing, it's important to show you out there. If you're watching us, we're in the market with you. I'm not just talking about investing. I'm putting my money into the market every single week. So it's something that I believe will get me to financial freedom and financial security. That's why I do it. Okay, here's the ticker, all the positions in the portfolio, total shares I own, and as of the close of business on Friday into Saturday is when all of these numbers were last updated. Current price here, market value in this column, average cost per share. This does include reinvested dividends, as does the purchase price in this column. Total return, whether I'm up or down, you're going to see it. If I'm up in a position, I'm going to show you. If I'm down in a position, you'll see that as well. Biggest loser is Comcast right now, down 27.66%. Biggest winner is Lam Research, up 117.07%. Which sector the companies fall in here? Quarterly, monthly, semi-annual payers. I should remove that monthly column. I just haven't done it yet. I don't have any monthly payers. I've kind of balanced out my portfolio with positions that pay out in different months so that I get payments every single month without having to have a monthly payer. Current yield, and this again is as of the close of business on Friday. My yield on cost here, portfolio weighting. So in the previous slide, we saw each sector's weighting. This is each individual position's weighting. And I do have a rule for my portfolio. I don't really want any one position to be more than 10% of the portfolio. I do not want any one sector to be more than 20% of the 20 to 25% of the portfolio. You can see here Google getting very close at 9.62%, as is Lam Research at 9.38%. It doesn't mean I'm going to sell anything out of this, even if they do go over 10% of the portfolio because they keep running up. That's fine. I just won't add to that position, and I'll look to add elsewhere out of the technology sector and out of those individual positions. estimated annual income per position in this column. Dividend growth year over year. This does get adjusted as they update their dividends. Payout months in this column, and where the company sits at 15% of a 52-week low. I use this column. I want to keep my average cost per share at or under 15% of a 52-week low. Total shares, and if you want this, I did not create this spreadsheet. Ryan Williams did. I've tweaked it over the years to make it my own and added some stuff like the portfolio salary. But if you want this, I can definitely put it down in below. Drop me a message down below and I'll shoot it over to you. You can definitely have it. It's free. I don't charge anything for it. I don't think Ryan did ever either. But I did not create this. But I can certainly share it with you if you're interested. All right, total shares, 7,234.489 shares. Market value of the portfolio, $462,321.21. I do have $377,329.68 out of my pocket. Doesn't include reinvested dividends, but it still would be out of my pocket. If I turned the dividends off, they would go into my pocket, so that's why I say it that way. So this is cash, including reinvested dividends that would otherwise be in my pocket. Total return up $84,991.53. Nice to see that I'm up, but not what I really focus on. I am up 22.52%. Again, not really what I'm focused on. I know a lot of people are only focused on total return, but it is not my end-all be-all for me, because unless I sell out of all these positions, I don't lock in this return. This is just an unrealized return right now until I sell the positions to lock it in, right? So nice to see. Doesn't really mean much unless I'm selling. I'm not selling, so to me it doesn't really mean much. Portfolio salary currently $1,124.98 per month. Per week, $259.61. Per day, the portfolio would make $36.99. And per hour, the portfolio would generate $1.54. Now, my yield on cost in this column, our current yield in this column, my yield on cost here, and this is what I'm focused on. Current yield is 2.92%. Yield on cost is 3.578%, and this is what I'm focused on. That's why it is circled in red over here. The dividends paid out by all the different positions in the portfolio, and it continues to grow as I add new capital on a weekly basis, usually monthly, and then as dividends pay out, right? Just like we saw with Pfizer this week, and they buy more shares of the same company with Kroger as well and Enbridge. Just like those companies paid out, their shares get reinvested. They buy more shares, and that adds additional capital as well. And then as companies raise their dividend, which is why these are highlighted in yellow, these are all the companies that have raised their dividends already this year. We have a few that haven't. Looks like we might not get anything from LenB or AT&T. That's all right. Sometimes it happens. We don't like to see it, but hopefully it's not a long-term trend. Omega Healthcare hasn't raised their dividend in quite a few years, but it continues to grow and go up over time, with most companies raising their dividend, and it sits at $13,499.80. So not quite to 13.5 yet, and I don't know that we're going to get to 14,000 by the end of the year. It's going to be ever so close. I think we probably will bust over 13.6, but I don't know that we're going to get to 14,000 by the end of the year. Let's see how close we're going to get. We're going to give it a try and see where we're at. What's going on in your portfolio? What did you add in your portfolio this week? Were you up? Were you down? Were you a seller? Maybe you're a seller right now, locking in some gains, thinking that we're at all-time highs. Let me know what's going on in your portfolio. Would love to hear from you in the comment section down below. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey of financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I have seen some suggestions in the comment section. Thank you for everyone who's made a suggestion for companies to cover in the Stock Pick of the Day series. I'll get to those on a day that they pull back, so make sure you're subscribed and tuning back in for those videos. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend and a great week coming up, and we'll see you in the next one. I'm not a financial advisor. You can read through the rest of this. I'm definitely not a financial advisor. I'm not your financial advisor, and you should be investing based on your criteria, your selected criteria. And if you need to, go seek the advice of a certified financial advisor, because I am not one.